Good morning, class. Welcome to Homeroom with Unk and Market Monk.
Morning, P. How's your week?
That was good. Just another week where I had a OUST. Was just sort of parked in that, waiting. Did well there. A lot of quick hitters with options. Don't really trust many of the moves to hold. So just some quick trades off pivots here and there. But trading small lately.
Yeah, definitely. I didn't get Redfin this week, so it wasn't as definitely as good a week in that regard. With you on just if either it's filling the cup or kind of slowly trickling into some long term swings that I like. Penn,
Yeah.
CLH, stuff like that. The best one I think last week, like I finally got all the way out of it, was Next. Mine are still okay, but yeah, I mean you can kind of separate the lack of better terms men from the boys in the stocks right now. There's just stuff that's resilient and stuff that's just along for the ride, and um, the more
Yeah.
cycles you go through, the easier it is to kind of figure that out. So yeah, I think we're here for a while. Said last week, and we'll get into it a little bit more with SPY, but we're probably gonna have 3 or 4 candles here. Well, 3 or 4 candles on the weekly time frame is a month, and you just got to keep that
Yeah.
in perception, um, and then learn to trade around it or learn how to stay in the market and not just not just give a lot back.
Yeah. I mean, I said yesterday I thought that we exited a market of kind of your medium duration swings and so what that means to me, I mean it could be shares too, but like swinging monthly options right now is just really not a good idea. And I don't care what the sector is, it just isn't holding a move that makes it worth it to really try to do that. You just sort of you're either really quick hitters or you're something much longer term. And even if you go much longer term and options are involved, there has to be some hedging going on, like multi-leg trades. It gets really complicated. So the simplest thing to do is to just trade off of well-established pivots. And like I said, I don't really care what the sector is with those that like MSTR reacts well to a couple spots. I trade that. And then just longer term things that have there's some kind of big idea driving why you're in that, and you park and you wait. Like the lidar thing, I've been on that for months. I didn't really know earnings was going to be a catalyst, but you know, put some extra focus there. It hits off 20-30% and call it good. So that you can just keep churning those. You'll do fine. But to think that you're just going to catch SPY, it's making it's a bottom here, and we're going to get some kind of sustained uptrend out of this. It's just not the conditions right now for that.
Yeah, from a swing standpoint, um, the stuff that we bought in September, October, when it was just like give yourself time, that those trades are done. It would have been nice to
Yeah.
make the year just for taxes on a lot of those, and even the free side. But if you're managing those trades, the stop loss got moved up, and it's pretty much hit by now. On I can't think of anything that is still around from that basket. Um,
Right.
so you just focus on the next group, and um, that's the skill for me is learning how to kind of give yourself time and knowing that I got to get on this bus now, and it's pretty obvious you just need some time right now. So um, that is, and then with the day trading or fill in the cup, a couple days last week where they, I mean, I set it by 6:45 my time. It's there's just not no volume today, and you're just not going to get outside the box. Um, and usually, if you are going to get outside the box, it's going to be to the downside without a lot of volume. So, news pops are kind of it right now. Hard to play the news unless it's really good. So, that and the Fed speaking last week kind of, you know, I guess kept me out of the market where usually I try to stay in it a little bit more. Um, yeah, and I don't see that changing anytime soon. Really, like so I think we're on the same page there as looking for a bullish move up. But you are gonna when you do see it come back around from my side, it's gonna be individual names first. So it's important to have a basket of plays that you do want to get into and monitor those and when they hit levels start DCA in and just a small basket right now. It's real easy to check on 3 or 4 names. In the
Yeah,
next
yeah.
session, there's definitely a couple jabs looking for more of that. Um, but yeah, time is your friend right now, so use it wisely.
So the on Friday, other than the OUST, the two best moves up for me were FedEx, but you see like where it was coming from. I mean, it just gets obliterated on earnings, bounces back, has some follow through. So I'd put that in notes. That was a good options trade. Different kind of one. Um, Boeing,
Sure.
obviously they got news. We've been we talked about that one weeks months ago. You just build and wait and so there's still plenty of room above, but a lot to feel good about there. But that's kind of how it's going to be at with these individual names. And on the flip side, we talk about one hitting a stop. I mean, for me, the kind of the last of the LMT from I loaded this move under the pivot. Um, there was flow there for 500, 520, 550, whatever, but it's stalled. I got rid of most of it on this pullback, and then they're the flip side of the Boeing news, and so those shares I had left hit my stop just in the middle of this big candle here, and I'm good with that. That's fine. And so then it parked right at the pivot for close. Not a stock that's just gonna zoom back up and go mid candle. I don't think we'll probably be here a little while, but yeah. So I kind of look to reload back back around here. So there's a lot of automated selling happening for me on stuff that I'd already won and mostly scaled out on. And I think the mentally for me, the thing to avoid is this feeling that you got this cash position building up. Um, so I need to spend it on something. I don't think that's the way to look at the market, but to just have, kind of have your plan, buy the stuff you were going to buy anyway. I'm not going to buy more of something else just because the Lockheed Martin stop triggered. You know what I mean? So I'm not actively building a big cash position, but at the same time, as the cash position grows, I don't really necessarily look for somewhere to put it. It's not burning a hole in my pocket, basically.
Yeah, smaller sizing for me for sure on stuff I'm in. Trading backside, we're back to that a little bit, which is not my favorite way to trade. Um, but and then yeah, not all in ever, pretty much. I just like to sleep at night. I think that's it. Um,
Yeah,
the the what I'm seeing a lot, and I mean Lockheed Martin's a good example, is that you're getting the 50 or the 200 EMA bounces, and I didn't start talking about those for no reason around the start of the year, maybe a month before the start of the year, because they're going to be important and they're going to show the overall strength in the market. And I kind of put it on the old guy. The old guys trade off of it. Well, it's a lot of big money trades off of it too. So they're gonna reposition, they're gonna defend, and they're gonna also get out, and figuring that out along the way is most important. And you just got to know the
how do
environment.
you
You got to just know the environment, and it's I can't stress enough. It's not the same as it was the last year. Um,
yeah.
we're good at figuring out how long we're going to be here, or when that's going to change again. I don't think we've went to a bearish market or anything like that.
No.
We were pretty strict that SPY wasn't gonna be a 28%er this year. You know, that 7 to 13% will be a great year for SPY, and that's just the market you're in right now.
Yeah, absolutely. On the 200, how do you treat a stock where if the 200 becomes resistance, so breaks down below it and can't quite get it back? What are what are your thoughts on that kind
Well,
of
the
setup?
name's important, and I go to fundamentals first just to see how those look. But that's your best entry is going to be a red candle. Um, if you're getting multiple daily or weekly rejection off of it, those are that I would play that a lot like I played AG, where six was just it for a while, you know, and you take your free shares or you just kind of trade that channel. Um,
So
I
it's like the to it not through it kind of thing that
yeah
I talked about.
yeah
Yeah.
I to be honest, I like EMA trading a little bit better than like auto RTL on the day trade, just because I don't know. I guess there's just more activity. You see it really kick on, and a stock will let you know again if it's going to be defended or not. And whales won't lose money. We always say that. So they usually need time to get out of big positions, and they're also greedy. We don't really talk about that. So keeping it around the 200 when it gets a little oversold from there. Lockheed Martin's a great example of that. You actually got this weekly candle. You have a higher low here still. Um,
Yeah.
so yeah, I mean it's tradable, but again, you got to kind of understand the trade, and you can't get back. Well, we can make this whole thing up. You have to know that. All right, it's a pretty big level, and either I'm going to sit here and watch level two, or I'm just going to take my money and fill the cup. And it is a cup filler's market right now. I mean, there's just not. Even when something gets good news, Boeing's a good example. Even when something gets good news, there's just not that much gas to it. There's not that much upside range to it. Um, yeah, I mean, made the fit. Boeing had the death cross back here in August on the EMAs, and then it made it back through the 50. Didn't get to the 200 on that news. Did respect the 178. Um, does that hold? We'll find out next week. But I mean, you're not seeing. I guarantee if I said, "Hey, P," even though that's next session, last five, um, you got
Yeah.
200s, 210s on Boeing. I know you're going to say no, but it's just again, you do the work and you check it and you make sure. And it's just you, the cycles are very important. If you're not going to make it as a trader if you don't pay attention to them, and I hate to say it, but we've seen this before. It's nothing new.
Yeah.
I was expecting it since October, November. I mean, that's when I started preaching about SPY pulling back, or at least the Mag 7 being that way. Um, it's just how long we get it for, and what's the catalyst that flips it around. And um, I hate to kind of be pessimistic because I'm normally not. I only trade upside, so I got to stay a little positive. But we're just in no man's land right now, and
Yeah. Yeah.
yeah, less is more. Do your homework still. I I do want to stress you can't just turn it off and come back next week. Um, you have to continue to do the process. You just have to. And if you don't, when you come back, you're gonna not be in shape, and you're gonna have to work through the start of a good market. And those are where your best entries are going to be is when the ship actually turns around because you're going to get a free. I hate to throw numbers on it, but you're going to get a free 20% in most things in that week or
Yeah.
month that it turns around, and you don't want to miss that boat.
Yeah. I mean, exactly. And yeah, some of that is language similar to what I was saying with if you look at stocks that are down, 15 to 20% year to date, that plausibly, as the flow resolves on my end, are going to go down 30% year to date in however long, 6 weeks or something. Those are going to recover half of that move just on market conditions alone.
Yes.
And so, so it's about finding, them just, bleed out to a pivot, see how it reacts there, take your time, don't plant a flag, all of that. And then, for me, the thing I see is that whales are working a little harder right now to on their maintenance of positions.
Sure.
There's a lot more noise and complications happening with with some of these things that they're not really looking to um, get out of, but they're selling more calls here, a lot of neutral flow, just sort of passing the potato back and forth and things like that. And then when I see people trying to get into reading options again, I can tell you what's driving that. It's not anything about um, them seeing something where, oh wow, this flow thing's working. They're cycling back to that because meme coins are dying because they all moved there, and so now they're coming back to try option flow, and it's really probably the worst kind of market to try to read options. It's not on easy mode, and the so if you don't know what you're doing, you're going to end up you're going to chase a lot of that noise I'm talking about. It doesn't really mean anything. So the contracts that come up as the hot contracts, the popular contracts, the kind of the sexy flow that's way out of the money, and weeklies and all that. I mean, it's just there's just not much. There's just not much to that. There's other things going on that you're not seeing if you just look at it at the surface. And so yeah, a lot of people are gonna have some trouble there. And the automated algo stuff, the alerts that people build off of that, isn't really necessarily, it's going to be late, or it's not built to filter out that noise. So you're just chasing random stuff at that point.
Yeah, I forgot the two. I know it was MSTR, and I forget the other one. But we talked just the candle structure and range last week, and you kind of got to live there, or if you don't live there, you need to learn it right now. And you know, 10 or 15% is great on your
Yeah.
cash, and finding that, staying there, and then DCAing into stuff that is on levels, like a Chewy CLH and
Yep.
Hims kind of stand out to me in that. But that, I mean, it's staying active there in these conditions, and I guess learning how to trade in these conditions. But I mean, we went from where we're getting 20% on one day on a lot of stuff, and you're not getting 20% in the week or in the 2 week of the swing. So they're saying on charts, and then it's why I don't have a lot of levels. UEC is a good example too of just taking the win. Like it bounces off your level, just take the win. And um, I would trade that totally different if it was different conditions. And
Yeah.
use our baseball. If you're 3-1, you get a free swing. If you're 3-2, you got to know how to foul off a ball, and that's just what we're dealing with right now. And if you try to, like, I guess, take a step back, it's really going to hamper your trading because you need to be more focused at this current time and where your money's at. I mean, if it updated your plays once or twice a day or even once a day, you need to be on there 3 or 4 times and just monitoring the chart, looking at volume or whatever your checks are. I know that I only got 2 notes this week, but one of them was that I noticed midweek the RSI on a lot of the weeklies are just in the dirt. It got SPY up right now. It's 42%. There's
Yeah.
not a lot of RSI is relative strength index. For me, it just means there's not a lot of activity. That's how I've always translated RSI. And there's some charts that are just nasty. I mean, you have 20 and 30 RSI on a chart that we used to day trade for 20%, and um, stuff like that's why checks again are important. And if you're not hitting all your checks right now, I would walk away from that stock. And if you're
Yeah.
hitting all your checks and getting burned, you need to redo your checks. But um, it's just a more diligent. I don't really have a better word in these conditions. It's easier to trade in uptrends, and it's harder to trade in consolidation or downtrends. And grasping that is going to save you a lot of time and money, and get you out of the 2 step forward, 1 step back, or 1 step forward, 2 step back, whatever the case may be.
Uh, yeah, absolutely. And so one for me that I wanted to mention was laser. So I it obviously had a big move on earnings. I was a little bit red on laser going into earnings from like an old swing, right? And I've been big on the lidar sector and all of that. I didn't manage that one particularly well, but when it popped on ER, I was just thrilled to just clear most of it, and then I sold the rest for a little small percentage, but and then Ouster was the one I did really well on. But so for me, I mean, we talk about the um, stops on stuff. You had a great entry, big win, set some stops, get out of it. Um, Clearing out when you're wrong is really important too, and just like I don't want to really deal with this trade anymore. I'd rather re-enter it, and laser obviously lots of room above and everything, but I'd never reason really to keep any of what I had left there, and you see people with the opposite kind of thinking. Um, Talked about CLSK all the time, but a lot of those guys were green on that, and they had been deeply red. They got lucky with the election pop, and just they didn't sell even when it recovered, and they got back. And like for me, the last two that have been like that were the Laser and Walgreens. Um, you kind of told me about Walgreens, bought some anyway. But Walgreens going private, gave it that little pop, cleared it out. I finished up 3% on the stupid thing that I held for months, and just move on. I mean, like figuring out when you want to move on is important too, because laser wasn't really that bad. Like it didn't fully break down from where I was or anything, but I mean, at the same time, kind of knowing that stock, I'd rather just take the gift and go ahead and get out. And so there's going to be some like that with these medium duration swings I talked about. Just when do you want to cut it loose? And if you're just gifted some nice pop pre-market or whatever, just think about maybe just getting out. So that's been something for me too.
I think sizing is the elephant in the room on this topic.
Yeah. Oh yeah.
It's for me. I mean, I have no problem telling people like I don't care if it's 100, $200. 300's usually my like what's going on here. You need to rethink this. When it gets to 5, 7, I'm I don't like to think about the position. So that dictates my sizing is like, well, if this stock revisits this level, how much money am I down so I can, like you've talked about lately, hold a red position. And the other caveat to that is that's not where I start. That's not how much I put in right off the bat. Usually it's
Yeah.
25% of that. So dictating what your whole position is by the the 1 to hopefully 3 up ratio is very important. I mean, I've been there before where it's I just stuck with my original plan. I'm just buying 1,000 shares, right? We'll just buy 1,000 shares. Trust me, I planted flags a lot in my career of 1,000 shares, and
Yeah.
I've learned that oh shit, now this $9 stock is now 818, and I'm down $800. And you in that position, you're not adding more. You're holding on, just wanting your money back. That position's a lot easier to manage when it's 200 shares and you're down $200. And then you can think, all right, well, I can add 200 more here, and I'm even on the one trade when I get back, and I'm up, a decent percentage on the other 200 shares that I got into. And I mean, that's just me throwing together an example, but
Yeah.
having that
Yeah.
in your basket, I think, is most important. Um, I am kind of not interested, but excited that you are in that environment now. Like that's things you're doing. Um, but I
Mhm.
also am very hopeful that you already have are creating those rules, and don't go through what most traders go through, which is, this is what I'm gonna do, and not really being able to pivot off of that, or or make adjustments along the way. I mean, because that's the skill of trading. It's not just being right and buying somewhere. It's what you do when you're wrong, how you manage it when you are wrong, and still coming out even or ahead when you are wrong. Because they're all possible with a good plan. Um, there's plenty of times where the quarterback call play action, he rolls out, three or four guys are like trying to sack him 10 yards back, and he turns it into a 15-yard run. I mean, it's possible,
Yeah.
but you have to have that plan, and things don't always go according to your first plan. Um, yeah, kind of rambling there, but it's
Well,
just
yeah, no.
it's
So yeah, for
important.
me,
It's
like,
important for people to. For me, I don't want people to have to go through the heartaches and pains that I went through to learn how to not do that. So getting that message out there to people that, hey, there is a way, but you just have to, you know, kind of update everything regularly, and think about both ends before you jump.
yeah. Well, we've talked a lot about the one share gang thing, but I mean,
Yeah.
there is something to, like, learn with $50 and not 5,000.
5 grand. Yep.
Yeah. So, and then, obviously, I mean, realistically, it's somewhere in between that, obviously, but I mean, that's kind of the point. Like, I don't, you can just, we talk about use the work with something small, see how it works, figure out, kind of what works for you psychologically in your schedule with your time and all of that. And you won't be one of those guys on Twitter talking about, oh, I'm out of dry powder, which just means that they traded their $5,000 account with options all day, maybe, and they ended up 100 or down 200 or whatever, but they, to burn through that amount of money and have it not settled, and then, okay, I'm gonna do this again tomorrow. For me, working through a lot of this came from the fact that I found so many great setups, and I still am, and there was a time where on a move of a stock that goes, I don't know, like a large cap that goes 60 or 80%, that I traded the first 15% of that move with options, and then I'm out, and then I don't really have another pivot for it. I don't want to chase it. It's not as easy to read now, but it's just a follow through on the flow I already had. So I can just keep re-entering it with options every day or twice a week or whatever. Or I could have just built something and just been in for the move and see the work play out. Now, being in stuff longer means I also have to think about and deal with what I just talked about with Walgreens and Laser, and been a couple others that dealing with that side of it too, which is something I didn't have to do with options. So I still I prefer to mostly be in the share side trades and have that be the biggest thing I'm doing. It's about 80% of what I'm doing trading wise now. But there's there's learning there. It's a different skill set, and so I'm still working on that, and I always will be working on that. I don't think you ever really.
Shit, I'm still working on it. What are you talking about?
Yeah.
I seen this guy, and it kind of your first comment made me think of it a little bit about the not having the funds, and I think that's one of the most dangerous things that Twitter people try to hide instead of being honest about it. But I guess say no names, Jordan. But this guy's posted a video, and he's good at TA. He really understands time and sales in the market on what he trades, and he does that little split box. Here's my loss, and here's my bottom, and it's a straight. First thing that caught me is like, bro, that's not good. You're 1-to-1 ratio, like that's what your box is. But he's doing live trading and short-term options, and he would enter an option, and it would almost get to the bottom of his box, and he wouldn't take profit, and then it travels back almost to his entry, maybe has a lower high, and then checks down, not quite to where it was the first time, which is just showing consolidation, checks back up. Like, there's 3 or 4 moves in here, and he's bragging about it did flush to his PT on the one he picked that I seen. But for me, you missed 3 trades, and you could have traded maybe
Yeah.
with a little less size. But I think those guys are teaching people how to trade with what you're talking about, with not a lot of funds, and if it's a recipe for disaster because if it all it takes is one in that regard, and then you got to go fund your account however you fund your account. And you got to take the lesson from the talking heads or the hedge funds managers. Like, those guys will not put more than like 3%. That 2 or 3% is a huge a part of their account into one stock. It
Yeah.
really is, and you have to, maybe you do 5% positions, 10%, even if you're a smaller account. I get it, um, but that's not the way that you win. You do win. I don't want to say with the buckshot method, but you do win having multiple positions. That way, one doesn't ruin you. And um, I am a 3-to-1 ratio guy. I preach that, but I'm not. I'm definitely not holding the whole position or not scaling out along the way. Like, it's nice to complete that ratio, but the ratio is just it's there as a um, it's like betting on red or black instead of just picking the number 14. You just have better odds
Yeah.
when you have that setup,
Yep.
and those are two things that I've seen in just one video that just kind of like people are gonna get ruined with those rules, and you got to have better rules than again 1-to-1 ratio and holding to your PT. But I think the holding to your PT thing comes from because this is the only trade I get today. This is all my
Yeah.
I'm gonna have to wait for settled funds now. So, man, the snake oil out there it looks nice, but it's still snake oil.
Right. And so one of the comments people will make on the people who trade like that. Oh, well, you're not trading, you're gambling. Um, well, I actually don't like. I get what they're saying, but I don't like that because they are in fact trading. But they're trading badly and they're trading in a dangerous way. But they're you basically, I mean, especially when you're talking about um, options, like there is always going to be danger there with options, and the danger is that you're trading something that can go to zero, and you have to respect that. But it is in fact all trading, and there's a gambling element to any kind of trading anyway. So it's sort of you know splitting hairs there, but I do prefer to just say that it is what they're doing is trading, but you have to understand that they're in a completely different environment, mindset, like all of that than you should be. It's a permanent small account challenge, and and some of those guys manage it okay with just extra money they have that they plan to that it'd be on Prize Picks if it wasn't trading, and they probably do both and all of that. But I mean, some people and it gets very destructive to their lives, and you see that with a lot of young people. I mean, particularly the people who they aren't really building anything else. It just seems like they're wanting to get into. A lot of crypto people are like this. They want to make it in crypto, and whatever job they have is funding that, but it's not a job that they're trying to advance in. Even if they're working at Domino's, they don't have managerial positions on the mind and entrepreneurial anything. It's just they're just plowing away at this, and it's just it's sad to see, and I think that for me that I've always felt, and I feel this way. I tell this to English majors. I mean that you have to professionalize, and it's never too early to professionalize and start thinking about that. Like I'll show students the whole process of this is how you publish, and the articles we're reading. This is how they were published. This is the whole process. I don't care if you're 19 years old. You should know about this now, and if this is something you want to pursue, you should learn how it works. And I'm not just gonna say, oh well, you got to wait till you're a professor, or you're in grad school, or something like that. Let's figure this out now. Well, if you want to get into stocks and you want to trade them, let's figure out how this really works. And most traders do lose. Why do they lose? And what can you do differently? And a lot of people are missing out on that guidance to them. Mentoring to them is just like, who can I follow that makes money so I can make money too? And there really has to be more to it than that.
It relates to everything in life, to be honest. I mean, it's definitely it's a style, or it's a lifestyle, and like kind of relate it back to my contractor days. There's a ton of people I know that, they started a business, they were doing good, and good, like they're doing good work, but man, when they got that check, they would spend it. They 300 bucks on the day. They're out there eating lunch. They're going spending 20 bucks on the casinos. They hit the convenience store and buy 4 Red Bulls and 2 packs of cigarettes, and eventually you're going to get a flat tire. And the reason I kind of use that analogy is that's what a lot of these younger people are doing on Twitter. I mean, they might be doing good right now, bringing in a couple $100, $1,000 a day, but they're also spending that. They change their lifestyle, and that's not going to build an account, and that's not a safe way to trade, because eventually you're going to be all done. It just takes one in that situation, and we said that before.
Yeah.
One L and you're done, and you see it with a lot of the guys on Twitter. But I mean, that goes to anything in life, and you have to build brick by. I mean, that's why I preach building brick by brick. That way, if you do take a little bit of L, it feels like free money, and not what am I going to do now, because you do want to get to a point to where you have enough to I'm going to use it again, even though I hate the ideology of it, but where you can have a little bit of a buckshot, or spread the load a little bit. If you're just constantly just doing one thing and only trading one way, it's not gonna last. It's just not gonna last. So,
Yeah.
And it's gonna affect you almost in anything in life. I mean, I've seen it along the way, and I'm still the guy that I say it to people. I don't know if I said it on here, but I do say it in private conversations a lot. Like, we've all had that minimum wage job. We all started off with nothing. You don't upgrade your lifestyle the whole way. You just don't. I still hit Fred Meyer for 50%, once or twice a month, because that's, I don't just go in there just because I have money and just throw it in the cart because I want it. And that's why I am where I am in life. And learning that and applying that to the market will also help you. Just because you made $1,000 doesn't mean you have $1,000 to spend. And it's what I see with a lot of the young people on Twitter, and it's why there's probably more we could name that aren't around that are around still.
Yeah, absolutely. So I'll transition to
Let's do that.
some commodities. I don't have a segue, but just moving us to the next thing. Copper. Here's that $5 move. Talked about it for months, even before it was $4. I was like, at 375. I was like, well, it's good. It's holding here in the middle of my zone. Can see 5. Got that move to 5 there, and then when 4 held again, that was an opportunity, and there's still a lot of opportunity in this particular space as far as the stocks go, but just really healthy move there. Seems to be forward looking to a lot of infrastructure activity. So to me, I mean, that sparks a lot in stocks, not just in metals, but also construction, suppliers, tools, like everything physical like that. So this is one of the healthier charts I've got as far as commodities go.
Yeah, I like your channel there. More of that, please. But yeah, good support, good supporter resistance flip there. I just follow you on all this kind of stuff. And copper's Copper's a hard one to like kind of lock down things on, but I think you just said it best that it's pretty much in everything. So understanding that
Yeah.
the boring names, boring things should do well with copper.
Yeah, absolutely. And then
Yeah.
uh, natural gas, nothing's really changed here. The the pullbacks you see are pretty normal. Still like a lot of the combo names. Still looking to get into that $5 to $7 area, and then we'll see where we go from there. A lot more geopolitical stuff going on with this one than
Yeah.
copper, but
Yeah.
I do definitely like this. Um, the whole price suppression thing is very real to me. Um, so yeah, I'm just parked in some names there
I
and
I have
comfortable.
I haven't yet, P, but I want to know who benefits the best from um any action in Alaska, because that seems like
Mm.
the plan of this
Yeah,
administration, and there's the entire Asian Pacific Rim is on board with doing something to get our natural gas over there.
right.
So I think anyone that has exposure in Alaska is going to do very, very well over the next 5, 10 years.
Oh yeah, I got some names on that for sure.
Perfect.
Yeah. Um, and then oil, really not much to say. Just same kind of deal. I don't expect some big some big breakdown in oil. And again, we just talked stability is what matters here. And
Yes.
same thing that I said I said last week that the drill baby drill idea. Um, oh well, increasing supply that's gonna lower the price. Okay, yeah, but who has all that equipment to lease out, and who's the pipeline companies and all the midstream stuff, and moving all that around. So it sparks activity in the sector, which activates a lot of things, and it's you're so the people who benefit the most tend to be some mid caps, and I'll save some of that for the next session, but it's just a lot of these companies that the stock's been kind of stagnant for, I mean, almost even a year or more. We'll start to see some activity, and I'll see a $22 stock with 35C leaps will pop up, and then I kind of go to work figuring out what's going on, what they do, and all that. So it's gonna be individual names rather than full send sector to me within oil.
Yeah, they're outside of the big boys. I could have threw a couple of them on the list week if for me
Yeah,
with
yeah,
the price point and only getting 10% just doesn't work for a lot of people. So kind of skipped over that and let you steer the ship. But the smaller ones we talk about, especially the one that I'm pretty diehard in, is the market conditions currently are not favorable for anybody that is burning money. And until these guys, for the lack of better terms, turn things on, that's just where they are because they have to maintain their fleets. They have to maintain pipelines
yeah.
not being used, stuff like that. But when that money turns on, that's where the range is going to be. And I don't think there's anyone better than you at finding those names early because of the share structure and the way the options work. They just can't hide from you.
Well, yeah, and I mean, and like into what you're saying, so you've got equipment out on some like deep sea rig. You know how much you got to pay people to be out there?
Yeah.
You need a part for it. You know how much it costs to get that thing out there, and you're not even using that stuff.
Yep.
That's just like to maintain it and keep it usable. So so yeah, I mean, and until those big leases go into effect, they're going to be a little bit stuck like that. Yeah, and as far as I mentioned the medium duration swings. Oil's been a little bit of an exception to that, where especially on the option side, a few of those have worked really well. EXE was one this week that did that, where you'll see something around $100, and it's like, oh, I can see this going to 110,
Yeah.
pretty soon, and then there's ones like that. But the read itself, I don't have the follow through on that. It sort of has to, like, let's get to 110 and then, will 140 show up? That's kind of what I'm waiting on. But you don't enter that planning for, I'm going to trade this to 140. So yeah, it can be a little bit limited share side, but works really well in options.
Nice.
And let's see. Gold and silver, not a lot to say here. I mean, gold has just continued to do what it's doing. I'm going to be pretty interested to see, we get to the 3,100, thinking about 3,200, that, we'll see kind of what goes from there. The people looking for the correlation between, gold continuing this trend and the market collapsing, the broader market. I don't see that. I don't see that correlation. And it's there's a logical fallacy. It's called ad hoc ergo propter hoc. Because of this, then that. It's and it mistakes time for cause and effect to say, like, well, gold's making this move up, so the market's going, it causes the market to go down. That isn't what's happening. The people who are in gold and have been in gold, the big money that's in gold, it's not the only thing they're doing. They're not completely pulling out of, SPY or anything like that. So I don't see that. I don't see that correlation. But nevertheless, gold's very strong, going to continue to be strong, and it doesn't mean a whole hell of a lot, except to say that there's a lot of good setups within that sector, and I don't read much into it other than that personally.
Yeah, no, it's definitely independent. I think you kind of we didn't talk about it a lot, but it came up a few times that it's the paper gold, probably still with the paper silver too. That's moving it more, and people having to deliver, and just that action kind of,
Yeah.
It's gonna level back out, but it's not gonna level. The chart's not gonna re-level back out in the commodity. I don't think we're gonna ever give all of that back. Like I read somewhere earlier this week, gold will be $1,800, in the next 2 or 3 years, and I was like, I really don't think so. Like something dramatic.
Right.
The news is really gonna have to change. In that market,
Yeah.
I like silver a little more,
Mhm.
just as the commodity goes and the charts go. But we caught something that's not normal, and more room up than down in a lot of those names still. I think the charts will level out, not the commodity price.
Yeah. I'm with you on that. And yeah, I'll go ahead and do it. Bitcoin,
God damn it.
still, still, I think it just might park here for a while, but I don't really see some explosive move to 100K brewing personally. I think we see the 70s again, so we'll go from there. But yeah, I mean, there's just a lot of the juice is kind of out of it. We're really cycling way out of the meme coin thing. I think that's really drying up. But Bitcoin will hold its own. Any kind of pullback from here just seems like a disaster to these people. So it's bounces off some pivots as we break down is sort of the look for me in the crypto stocks. And I don't really touch the miners in this situation.
That 88 to 72 channel, we living in it.
Yeah.
I don't like the people out there now saying the government buying it is like super bullish and it's going to the moon because of that.
No.
I really think, and you can label how much of a conspiracy theorist I am on it, because I mean, I inherit it from no one else. It's just my own idea. But I know who Satoshi is, and I say that lightly. I'm not like standing on it or anything. But Satoshi probably the CIA.
Yeah.
You know what I mean? Like
yeah.
That's just what I mean, and that's not going to be a catalyst up. I really don't. Again, what was Bitcoin supposed to be? And the government getting involved definitely wasn't what it was supposed to be. So I just haven't liked
Right.
that. Venezuela, we seen what happened down there, just didn't work out. I'm starting to not see value even in Bitcoin. I love blockchain. I think blockchain is very usable. I do think it can be used for a monetary, but again, it's like I've always said, it's the American Eagle, bald eagle, silver dollar, gold coin. It's not Bitcoin that it will end up being. Um,
Yeah.
I mean, that might be our country's angle. Is like, well, we own enough Bitcoin, and that's what we're gonna tether it to, or whatever. I don't know the fucking terminology because I don't care about pet rocks. But that's that might be their pivot. Is like we own Bitcoin, and here's our meme coin, for the lack of better terms. And meme coins are
Yeah.
just NFT 2.0. Um, y'all are if you don't have a lot of time, you're wasting your time worrying about Bitcoin. You missed that ship. You just did. You just really missed that
Yeah.
ship.
Yeah. And yeah, so that's pretty much what I got. Unless you want to
I just want to
touch
talk
on
about.
Spy or anything.
I just want to talk about the spy candle. I mean, I don't.
Okay. Yeah.
I don't straight up call candles ever. I mean, this session's free to everybody. You can go back and look at last week, around the 31-minute mark. I You have to have that anticipative outlook. That's more why I'm not trying to say I'm a genius or anything, but I'm trying to say that everyone should have that. What should be next, and what does that mean? Um,
Yeah.
and again, we're on the 50. We got the higher close, that 162 I mentioned on Friday fought back, which I expected, especially with the activity in the option. We have a higher high, a higher low here,
Yeah.
but we're not gonna leave this 50 SMA for a while. Um, would it be nice to get another higher low here? Yes. Do I think that's going to happen? If we're correct on what the market's going to do, we won't see this 570 this week. We're just not going to see that. But we should stay inside is what I'm looking for. Another inside candle, maybe an inside bar candle even on SPY. It's good to find. I find more value in SPY now than I did over the last year and a half. Um, Fortunately or unfortunately, however you look at that. But this is going to really show overall market strength. Um, and it kind of fits into our thesis of the Mag 7's not going to do great this year. Spy doesn't need them. And the Mag 7 before was Fang, and before that it was something else, and before that it was something else, and expect that to continue to change. I'm expecting the next acronym will start with an N at some point, but what else is that? I don't know. It might be
Yeah.
two N's. What up, Netflix? It might
Right.
be two N's.
Right. Um, yeah. So the option side, there's really just kind of two contracts of note here. It's the April 560, which obviously we're kind of right there. They're just sort of passing that one back and forth, and then it's the June 545, and that's leaning bid side right now. So if we're going to continue the 3-2 market leading us further down, it's going to be somewhat gradual as they work through this. But I don't really have much that's plausible below that. Ton of stuff expired on the 21st, so I get a fresh look at this next week, which I'm looking forward to. Um, but yeah, so those are really the two. Nothing really earth shattering there.
Yeah, I mean, I don't expect it, but I'm mindful that it's a highly probable that we'd get a big down candle before we start to make the move up. And for SPY that's $30 or so, but people on the minute chart or the 4 hour chart are gonna think the sky's falling. That's not off the table. That card is still on the table. Um,
Yeah,
and kind of expected. I'm looking for strength, but I also understand what weakness would look like, and um, we might still get that. I don't think we need a world event to get that. We really don't. Market can just sneeze on us, and we're
yeah,
we're in a position to where that's possible currently. So when you put the draw two down, someone else can put another draw two down, and Yeah, just expecting it, watching for it. I also want to reiterate, like, there's no reason to rush in to these kind of plays or these kind of theses because you're gonna see stuff brewing way before. Like, until you're talking about September, at this well, right now it's September. I might kick that
Yeah.
can down the street a little bit, but until you're
Right.
talking about September, I don't see any dramatic moves to the upside.
Yeah, totally with you on that.
Awesome. You ready to get to work, P?
Yeah, we'll grab a coffee and then we'll do that.
Like and subscribe, link somewhere, people.